Okay, all right, guys. Let's check something. So concerning the topic we are taking today is under chart reading essential. Okay. As a matter of fact, this particular topic is very necessary, and we don't need to miss out. So, like what I told you guys, you can see on my screen now. You can see these things that are green and red. Let me say these green and red stuffs things you see in here, all these green and red things you see. Okay, from the beginning I told you guys these are called candlesticks. Okay, they are all candlesticks, and like you all know, each of them has its own name. For instance, each of them has its own name. Let me show you something now. For instance, let me say, oh, let me take this brush out. So each of them has its own names. Okay, all right. So like I was saying, each of them has its own names. So as followed. So for instance, if you should go through that particular PDF which I gave to you, and if you have not gone through it, I'll be dropping it on the, you can join my group on Telegram, so I will drop the link for you. Okay, I'll drop the PDF for you. So like I told you, each of them has different names, just like this particular one you're seeing, this green one that is very long. It is called the Marabuzo candlestick. You can see it here. Whenever I see it, I always know the name, and it is called the Marabuzo candlestick. This particular green one I circled here, you can equally see it another place again. It is called the Marabuzo candlestick. It is very long, and the Marabuzo candlestick is, this is the bullish Marabuzo candlestick, and you can equally see this particular one again. This is the red one. It is called what? The bearish Marabuzo candlestick. I told you guys that we'll have key terminologies in forex trading, and as forex traders we'll have our own particular language that we speak. Okay, and let me tell you guys something. For instance, seeing these things in the chart, I'm coming, let me take this off. Okay, so for instance, and you come to this particular thing now, you see on my screen, they are green and red moving up and down. You understand? They are called candlesticks, and I told you that each of them have their own names, and I equally give you some names that equally you can see, just like this particular red one here. Okay, let me take it out. This inverted hammer, this particular red one I'm trying to circle right now, that is upside down, it is called an inverted hammer, or it is called a shooting star. Okay, so they have their own names, and let me say the names that they have their own meanings. Also, they have what they represent. When they finish forming, after their formation, there is a change that happens in the market. Either the market tends to change either to a bullish wedge or a bearish wedge, which is what, either it moves up or it moves down. Like for you all know, and for those that are watching this video, bullish in forex is a sign that the market is going up or the market is buying. And bearish in market, when you hear that the market is bearish, it means that the market is selling or it is moving down. So these are the words that we use in forex, and so I'm trying to break it down and in a layman's understanding on this video. So equally, the combination of these different candlesticks you are seeing now, the combination of this candlestick you are seeing, as you can see, when they join together, when they combine together, it is what we call the chart. Okay, when these candlesticks now combine together in order to give us this particular let me say formation, maybe when they join together one after the other, it is what we call the chart. So the combination or the coming together of these candlesticks give us what we call the chart, the full chart in forex. Okay, so once again, you can understand that when market is giving a higher high and a lower low, it is a sign of a trend. So for instance, now let me tell us something again that we need to understand in this chart reading essential. When you are reading the chart, all these things I told you, make sure you go and master the names of those candlesticks. We have the shooting star, we have the inverted hammer, we have the Marabuzo candlestick, we have the evening star, we have the engulfing bar candlestick, and we also have the harami candlestick. We have doji. Different kinds of candlesticks will have their names. Okay, and I won't be listing all of them here, because you can quickly go to that particular ebook PDF that I gave to you and learn those things. Okay, make sure you master them. They are very important. As a forex trader, you must have all of them in your head. You must, I repeat, is a must. you must have the names of those candlesticks stored in your memory. So let's proceed now. And in this particular chart now, when you're reading a chart, there are some things you should make sure there are some things you should make sure that you have in your head. First and foremost, to have this particular thing which you call the time frame is equally in your, let me say, in your, okay, let me digress and move to let me say MT5, and let me move to MT5. Okay, it's equally in your MT5, and let me say, so at this particular point you can see I'm using this MT5 now. We'll have what we call the time frame. You can see those candlesticks that I listed. We'll have what we call the time frame. At this particular point, you can see we'll have the M1, we'll have the M5, we'll have the M15, we'll have the M30, we'll have the H1, the H4. All these things, as you can see, this is the minute 1. That's 1 minute time frame. This is the minute 5. This is the minute 15. This is minute 30. This is hour 1 time frame. Okay, so, and this is the hour 4 time frame. This is the D1 daily time frame. This is the weekly time frame. As you can see, all these things are different types of time frame, and let us equally go to this particular place to bring them out. Okay, so seeing this particular place, we have the 1 minute time frame, 2 minute time frame, 3 minutes, 5 minutes, 10 minutes, 15 minutes, 1 hour, 2 hours, 4 hours, 8 hours, and 24 hours. So right now, how do we use those things in trading? We go to 1 hour time frame, we'll go to 1 minute time frame. Once you go to 1 minute time frame, you will discover that a new particular chart pattern is being formed in 1 minute time frame. Now, what are we doing here in 1 minute time frame? Looking at my screen, you can see that the market is actually going on. This is the synthetic market. Okay, this particular video I'm doing this video using the synthetic pairs. This is volatility 25 index. It can only be traded by the right. This particular market doesn't close. No matter what happens, this particular market doesn't close. So it is totally different from the forex market that you know. So in this particular point, you can see that the candlestick is going up and going down. Look at the last candlestick that is forming. Are you seeing what is happening? It's moving up and it's moving down. Now, this particular